NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the 7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular on many major news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%, Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his #1 AI stock to buy right now. For a limited time, you can get this information for free at aifrenzy2023.com. Again, that's aifrenzy2023.com for a free copy of his new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here in New York City. But I am joined by our longtime friend Rick Rule of Rule Investment Media. He is at our Stansberry Alliance conference in Las Vegas. He joins us now. Rick, wish I could be there with you.
Daniela, I wish you could be here with me. I miss you, but this is the next best thing. Thank you.
Next best thing, and I wish we were speaking, as always, under better times, but the world just keeps getting worse here, Rick. So obviously want to catch up with you with everything happening. Want to start by recent comments from JPMorgan Chase's chief executive, Jamie Dimon, who sounded a major alarm about the global effects regarding the conflict in Israel and Gaza. He said, quote, "This may be the most dangerous time the world has seen in decades." He warned of far-reaching impacts on energy and food markets, global trade, and geopolitical relationships. Do you think that's a fair statement, Rick?
Perhaps a bit extreme, but I think when you get somebody that is much of a fulcrum, as much of a nexus as Jamie Dimon is, at the same time that you have somebody with his extraordinary track record of success in a seat of power, that you have to listen. You do have to listen. It's not as though we haven't faced challenges before. It's not as though we haven't lived through risky times before. But I suspect that what Jamie Dimon is referring to is the fact that we've gone through 40 very benign years, the sort of period, 1982 to 2022, and pretty clearly those times are over. If you put what's happening in the Middle East on top of what's happening in the Ukraine, on top of the geopolitical tensions that we're facing other places, clearly the next 10 years is going to require a lot more dexterity than the last 40 have.
Really well put, Rick. And obviously I want to focus on that today with you of how investors, look, yeah, it's a dire warning from Jamie Dimon that, as you said, when he speaks, we should listen, and what adjustments investors need to make. So I want to talk about that. But first, you mentioned Russia, Ukraine. We're actually speaking on day 601 of the Russia-Ukraine war. Wall Street Journal had this headline: "Chaos in Gaza spells relief for Moscow as U.S. focus shifts from Ukraine to supplying Israel." From the BBC, "Distraction from Ukraine. With the upsurge in violence in the Middle East dominating the international news agenda, Moscow's counting on dramatic headlines from Israel to divert attention from Russia's war in Ukraine. But this is more than just changing the news cycle. The Russian authorities are also hoping that as a result of the situation in the Middle East, some Western arms supplies to Ukraine will be redirected to Israel." Now, we did hear President Biden saying that he continues to pledge and wants support to go to both. But thoughts on this? Is it a total distraction from the situation in Ukraine now?
Probably the Russians hope it is. From the American point of view, I suspect the difficulty is that we're trying to be all things to all people. These are both, if you think about it, odd wars. They're more political police actions than wars. If we're engaging in a proxy war with Russia, when I say we, I mean the United States, it's interesting that, as an example, our uranium imports from our alleged enemy, Russia, doubled in the last 12 months. This is a very strange war, if it is a war, to plot, in the sense that the war is being played out in very subtle ways. From the American point of view, I guess it's only a war that we can prosecute if no Americans suffer. This is a war, too, where there's an embargo on Russian hydrocarbons, except for Russian hydrocarbons trade freely, including to Western Europe, and until very recently, actually, transited through Ukraine, with the Russians paying their enemies a transit fee. This is not a war, Daniela, of the type that any of us have experienced before,
Right.
which is one of the reasons why investors are going to have to be so dexterous. I think the other thing that we need to consider is that there may be other potential flashpoints. I'm not trying to say, as an example, that the Chinese could use this distraction in the Middle East and in the Ukraine to affect their territorial ambitions with regards to Taiwan. But one wonders how many police actions the United States can engage in simultaneously, particularly running a $2 trillion deficit. These questions are bigger than I, Daniela, which is why I'm dancing around them. I try to deal more with resources, but I certainly understand the question.
No, but you're definitely bringing up thought-provoking questions. And to your point on uranium imports, I mean, how is that? I mean, I find that extremely interesting. And how would that be possible, Rick, that they've doubled?
One wonders. It's not for me to wonder why, if I'm questioning President Biden or Governor Newsom or any of these political figures. I just look at the numbers. The fact is that U.S. imports, particularly of special work units and re-enriched uranium from the Russians, have doubled over 12 months. A strange way to act in a war.
Is there, so getting back to a game plan for investors, right?
Yes.
When you saw the headlines about the Middle East, I mean, did anything pop in your head that you're like, okay, that's how a portfolio should shift? Or is it just always been part of your game plan of being on the defense rather than offense, would you say?
I'm enough older than you, Daniela, sadly, that I remember the Arab oil embargo of the middle part of the decade of the 70s fairly well. To the extent that there was the political will and the economic capabilities of predominantly Muslim nations to deal with the geopolitics of the Middle East by actually constraining supplies of oil and gas to the West. I'm not saying it's going to happen, by the way, but I think it's something that people who invest in oil and gas or people who invest in the broad economy need to consider. What is certain about the circumstance that we're in today is that major resource-producing societies and major resource-consuming societies are not investing substantially in sustaining capital around natural resources, which will, in the future, make them more scarce. The Russians, as an example, have other things to do with their money. They're selling, much as they did in the early part of the 90s, anything that they can turn into cash, including commodities, driving commodity prices down. At the same time, the Russians aren't investing substantially in the sustaining capital investments that they need to maintain their own oil production, which means that 2 years from now, 3 years from now, 4 years from now, the Russians' ability to produce oil at the same level that they produce it today declines materially. The longer that they spend money in the Ukraine and the longer that they starve their domestic oil industry, the more that their domestic oil industry becomes production capability constrained. We saw this happen in Venezuela. We saw this happen in Mexico. When you starve oil companies for sustaining capital investments, you impair their ability to produce, and you impair their ability to produce for a long time. And I'm not limiting this to Russia. We're seeing around the world a dearth of new project investment and a dearth of sustaining capital investment that will impact us as consumers of raw materials for a long time. I think that the probability around that lack of sustaining capital investment means that consumers and investors need to think about higher raw material prices, probably substantially higher raw material prices 5 to 6 years out. I realize that 5 to 6 years may be beyond the time frame of most investors, but that notwithstanding, that's something that people have to look forward to, if that's the right phrase.
If someone is heavily weighted in mining stocks right now, would you suggest to take some of that money out and put it into oil-focused companies?
Yes, as a matter of fact. I think in the near term, particularly the North American oil stocks will probably outperform the markets, the mining markets. I need to say, Daniela, that the prognosis I just gave you about raw material shortage is a 5-year prognosis. If the world manages to sail into a worldwide recession, you can have lower supply if you have lower demand and the prices still don't move. The cap that we seem to see in the oil business and in the mining business, I think has to do with the specter of global recession, which is a very, very, very different topic. I'm not saying it's going to happen. I'm not saying it isn't going to happen. I'm a credit analyst. I'm not an economist. But I think if you are looking at the thesis of the sort of talk I just gave you, the fly in the ointment from an investor perspective is the specter of recession.
You still like cash, gold, uranium? Check, check, check.
Yes, yes, and yes. Cash, despite the fact that I believe the higher deposit rates that we're enjoying are still below the real rate of inflation, I think you have to have cash because cash gives you the tools and I hope the courage that if we have a liquidity-driven market squeeze, that investors can take advantage of that squeeze rather than being taken advantage of by it. Uranium, for the reasons that you and I have been talking about for 3 years, we're using more of it than we're producing. And it's an important part of the ascent of humankind. Gold, because gold does well during periods of time when people are concerned about the maintenance of the purchasing power of their savings in conventional assets. So yes to cash, yes to gold, and yes to uranium.
Want to talk housing with you now, Rick. Builder confidence in the market for single-family homes dropped to the lowest level since January as builders contend with a market dominated by high mortgage rates and costs for financing. Builders point squarely to mortgage rates, which are now at a 23-year high. The average rate on the popular 30-year fixed mortgage has remained over 7% for 2 months, and affordability has fallen to near record lows. Let's talk about housing. Is this a disaster waiting in the wings?
Perhaps. I mean, affordability is very difficult. People, particularly younger people who are trying to get into their first home, are having difficulty saving the newly required down payments at the same time that their costs, not just their mortgage costs, but also their taxes are escalating. Builders are finding inflation throughout the value chain in terms of building new housing. Permitting and fees are going through the roof. Lumber is expensive. Labor, where it's available, is expensive. At the same time, the sellers of existing homes are hoping to get paid the prices, if they sell them, that they would have enjoyed 2 years ago. There seems to be an enormous gap between the bid and the ask. My suspicion is that if interest rates rise, then the gap will close to the downside, that some sellers will be forced to capitulate. Of course, there's a whole class of sellers that enjoy, and I think that's the right phrase, mortgages, long-term mortgages that they locked in 2 years ago or 3 years ago. Those people are in the wonderful position of having a liability, which is to say a mortgage that's really an asset as a consequence of the very, very, very low rent on their money. What I think you will see in the next two or three years is a dramatic decrease in new construction. And I think that'll be felt in a negative way, really throughout the economy.
I guess one other point on the U.S. economy, are you surprised by the consumer strength we're seeing? Consumers showed surprising strength in the month of September, Rick, boosting retail sales well above expectations despite the high interest rates and worries over a weakening economy. So the consumer is still showing up.
Daniela, you're polite enough not to talk about discussions that we had 3 years ago where I said that I thought that higher interest rates would have a much more dramatic impact on the economy than they've had. I am amazed by the resilience in the American economy in the face of federal government stupidity and in the face of higher interest rates. The United States economy is truly a beast. I'm not trying to say that it's a beast that can continue to take abuse at the levels that we shovel at it, but I must say that the resilience of the United States economy has surprised me and pleased me greatly.
Okay.
It's interesting being at a Stansberry conference where, you know, the major theme seems to be the world ends on Wednesday and here's how you can profit. But the truth is that we do have an economy that has an awful lot of strengths, and those strengths have been evidenced in the last 2 years in very surprising fashion.
Or maybe consumers just think they're wealthier than they really are.
That could be too, but they've thought that for 2 years. Now, Daniela, remember that you're talking to somebody who has correctly forecast 17 of the last 3 recessions. I'm always nervous. And as I say, I'm delighted with the strength in the economy. There's nothing in the world that makes me happier than having been wrong on the direction of our economy and the severity of the direction.
Perfect segue, Rick, because I'm happy you're thrilled with the U.S. economy, but you've been quite critical of what's going on in Canada. As you know, I follow you on social media. Freeland recently, was saying how she was speaking at the IMF about Canada's work to build an economy that delivers for the middle class, yada, yada, yada. Your response, Madam, did your talks include an explanation of why Canada has the weakest economic performance among major economies? Just some thoughts from you, Rick, about your assessment of what's going on in Canada.
I think that Canada has the disadvantage of being a much smaller market than the United States. I don't think that American political leadership is decidedly stronger than Canadian political leadership. I believe that the depth of the U.S. economy, as a consequence perhaps of there being 350 million of us, means that our economy can take uglier blows. Certainly the self-congratulatory sense that the Liberal Party of Canada exhibits while simultaneously ruining the Canadian economy is problematic for me. I joke that I only criticize governments in places that I pay tax. Unfortunately, that gives me a lot of targets, including Canada.
Yeah.
The whole stance of the Laurentian establishment against fossil fuels when producing fossil fuels is the thing that Canada does the best. Surprises me, and on behalf of Canadians, infuriates me. The idea that you would sabotage an economy with as many potential strengths as Canada has, an educated workforce, resource-rich economy, wonderful human resources in the natural resource space, which is to say wonderful technology in mining, wonderful technology in oil and gas. The idea that you would sabotage all those advantages for ideology infuriates me and frankly makes them very, very easy targets for me in social media.
And wonderful people, if I may add. But Rick, I know you are speaking at the Stansberry Alliance conference happening in Vegas, so I will let you go. I have to say, I thought I was going to find you a lot more pessimistic today, but you were quite optimistic given everything we're facing. Knowing you.
You know, Daniela, I'm in my 50th year as an investor, and surprisingly, I guess I've learned a few things in 50 years. The first is that if you think in 2-week cycles or 3-week cycles, almost irrespective of the economy, you'll lose. I think in 5-year or 7-year cycles. With specific regards to the United States, what has struck me is that this is such an incredibly creative society that irrespective of our idiocy collectively, our individual creativity and tenacity always seems to be able to finance our collective stupidity. A group of 5 or 6 kids take over a garage in Sunnyvale, California, and out pops Google, or out pops Apple. The fact that we as Americans, despite our challenges, despite our differences, keep creating things means that it's likely in the next 10 years that while we will do our best to destroy ourselves, we will fail, and life will go on, and life will be good. We'll have challenges between now and then, to be sure. But if I've learned anything over the last 50 years, it's that pessimism should be something that tempers your action. It isn't something that should drive all of your actions.
Rick, thank you so much. I know you need to run and get to your talk, so thank you so much for joining us on the sidelines of the Stansberry Alliance Conference in Las Vegas. And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to the Daniela Cambone Show. And don't forget to sign up at danielacambone.com to stay on top of it all. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.